Do not budget a single dollar of your 2026 Social Security raise until you watch this video. Right now, there are 3 separate hands reaching into Social Security checks across the country. Not next year, not in some distant policy proposal, right now. The first hand quietly takes back more than half of the cost of living raise before it ever reaches your bank account. The second hand reaches 2 years into your past to slap you with a monthly surcharge based on money you earned in 2024, even if your income has completely collapsed since then. And the third hand? It is the most dangerous of them all. One confusing letter arrives in your mailbox, and if you make the mistake of doing nothing for just 30 days, Social Security can slice your entire monthly check in half, not half of your raise, half of your total check. Now here is what makes this moment critical. Every single one of these reductions happens automatically, but stopping them is never automatic. And for one of these 3 rules, millions of seniors getting hit right now already qualify to stop the deduction entirely. They qualify today, yet almost no one files the paperwork because nobody tells them the form exists. Stay with me, because before this video ends, I am going to give you the exact program name, the exact form numbers, and the exact words to say on the phone so you aren't bounced around government offices for a year. If you're new here, subscribe and turn on the notification bell, because this channel exists for one reason. We read the fine print that decides what happens to your money before the system decides for you. Let's start with rule number 1, because it comes dressed up as good news. Rule number 1, the raise that shrank before it reached the bank. Every year, news headlines announce a Social Security raise, the cost of living adjustment, or COLA. For 2026, that raise was set at 2.8%. When seniors hear 2.8%, they do the math in their heads. They think about the price of groceries, the rising electric bill, and prescription costs, and they feel a small breath of relief. But here's what they don't put in the big, bold headline. The single biggest medical expense most seniors have, the Medicare Part B premium, is pulled straight out of your Social Security check before you ever see a dime. You don't write a check for Part B. You don't authorize a monthly transfer. It is simply taken off the top, quietly, every single month. And for 2026, while Social Security gave you a 2.8% raise, the standard Medicare Part B premium jumped from $185 a month up to $202.90. That is an automatic $17.90 increase taken out of your check every single month. Now, $17.90 might not sound like a crisis if you get a massive monthly benefit. But let me tell you about Bernice. Bernice is 73. She lives outside Dayton, Ohio, where she spent 31 years managing a high school cafeteria. Bernice receives a gross Social Security benefit of $1,250 a month. When the 2.8% COLA was announced, Bernice sat at her kitchen table with a pencil. A 2.8% raise on $1,250 comes out to $35 more per month. To Bernice, $35 meant keeping the heat set a few degrees warmer during a freezing Ohio winter. It was real money. Then her first 2026 payment hit her bank account. She looked at the deposit, confused. It wasn't $35 higher. It was barely $17 higher. She recalculated. She thought the government had made an arithmetic error. The arithmetic was right. Her gross raise was $35, but the Part B premium increase immediately clawed back $17.90. Over half of her raise was swallowed before the deposit ever crossed the threshold of her bank. Nobody sent Bernice a letter saying, "We took half your raise back." They sent her a notice saying, "Congratulations on your 2.8% increase," and a separate technical notice about Medicare rates that she never thought to lay side by side with the first one. Now some of you are thinking, wait, isn't there a hold harmless rule that protects my raise? Listen closely, because this is where partial knowledge becomes dangerous. Yes, the hold harmless provision exists to keep your Social Security check from going backward solely due to a Part B increase, but it only promises that your check won't shrink. It does not guarantee that your raise actually reaches your pocket, and it doesn't protect everyone, especially if you are new to Medicare or pay higher income surcharges. So what is the fix? If you are living on a fixed income and that $202.90 Part B premium is taking a bite out of your budget, you need to look into Medicare Savings Programs. These are state-run programs that use federal funds to pay your $202.90 Part B premium for you. If you qualify, Social Security stops deducting the $202.90 from your check, handing you back over $2,400 a year in cash flow. And here is the tragedy. Millions of seniors who qualify right now never apply because they hear the word program and assume they earn too much. Many states have raised their income guidelines or completely eliminated resource limits for programs like SLMB and QI. Do not be your own gatekeeper. Do not assume you're ineligible. Make the state say no. Call your local state health insurance assistance program or SHIP or your state Medicaid office this week and ask directly, how do I apply for a Medicare Savings Program to pay my Part B premium? It costs nothing, and if you qualify, it puts more money back in your check than the annual COLA raise ever will. Rule number 2, the surcharge from a life you left 2 years ago. If Rule 1 made you angry, Rule 2 will make you sit up straight. Because this rule reaches backward in time. The government can charge you a massive extra monthly surcharge on your Medicare Part B and Part D premiums today based on the money you earned 2 years ago. It's called IRMAA, the Income-Related Monthly Adjustment Amount. Here is how the trap springs. To determine if you owe a surcharge in 2026, Social Security doesn't look at what you are making today. They don't look at your budget right now. They pull your tax return from 2024. For 2026, if your 2024 modified adjusted gross income was over $109,000 as an individual or $218,000 for a married couple filing jointly, you step off what financial planners call the IRMAA cliff. Crossing that line by even one single dollar triggers Tier 1 of IRMAA. That adds an extra $81.20 a month to Part B and $14.50 a month to Part D. That is an extra $95.70 every single month taken straight out of your Social Security check. Over $1,148 a year, just for stepping over a threshold 2 years ago. Let me introduce you to Calvin. Calvin is 69 and lives in Reno, Nevada. In 2024, Calvin was finishing out his final year supervising maintenance crews. He worked overtime, cashed out 30 days of unused sick leave, and received a one-time retirement bonus. His income on paper for 2024 hit $122,000. Then, in late 2024, Calvin retired. By 2026, Calvin was living on a modest pension and Social Security, making $52,000 a year. But when his 2026 Social Security notice arrived, his Part B premium wasn't $202.90. It was $284.10, plus an extra Part D surcharge. Calvin stared at the notice and said what almost every senior says, "I don't make that money anymore." He called Social Security, assuming it was a computer error, but the worker told him, "No, sir, that's based on your 2024 tax return. The calculation is correct." Most seniors stop right there. They assume a government letter is the final word. That assumption costs retirees thousands of dollars. What nobody tells Calvin is that there is an official process designed specifically for this situation. If your income dropped because of a recognized life-changing event, you can demand that Social Security recalculate your premium based on what you earn today. The qualifying life-changing events include work stoppage, work reduction, death of a spouse, marriage, divorce, loss of pension income, or loss of income-producing property due to disasters. Because Calvin stopped working, he qualifies. All he needs to do is fill out Form SSA-44, attach proof that he retired, estimate his current lower income, and submit it. When Social Security approves Form SSA-44, the surcharge is wiped away, and they will even refund the extra money they deducted from earlier in the year. If you retired, lost a spouse, or reduced your work hours in 2024 or 2025, do not accept an IRMAA surcharge. Download Form SSA-44 immediately. Rule number 3, the letter that can cut your check in half, the quietest, most devastating rule on the books. Rule 1 takes a slice of your raise. Rule 2 takes a surcharge. Rule 3 can take half of your entire Social Security check. It starts with an overpayment notice. An overpayment happens when Social Security determines that they paid you more money in past months than you were strictly entitled to receive. Sometimes it's due to a reporting delay. Sometimes it's an administrative mistake on their end. But regardless of whose fault it is, when the system catches it, they demand the money back. Consider Nadine. Nadine is 75 and lives in Savannah, Georgia. She receives $2,000 a month from Social Security. That money pays her mortgage, her lights, her groceries, and her blood pressure medication. One afternoon, Nadine opens a letter from Social Security. She was overpaid by $9,600 over the last 2 years. She didn't have $9,600 sitting in a bank account. She spent it on basic survival. Nadine panicked. set the letter on her dining table, and decided she would try to figure it out next week. That was her critical mistake, because the clock was ticking. Under Social Security rules, the agency waits at least 30 days after issuing an overpayment notice. If you do not respond, file an appeal, or request a waiver within those 30 days, Social Security can automatically withhold 50% of your regular monthly benefit until the debt is paid off. For Nadine, 50% meant her $2,000 check was instantly slashed to $1,000 a month. Try cutting your household budget by 50% overnight. It is catastrophic. Here is what you must do if an overpayment letter ever lands on your kitchen table. You have 3 specific doors you can walk through, and you need to choose the right one immediately. Door number 1. The appeal, using Form SSA-44. Use this if you believe the overpayment is factually wrong. Door number 2. The waiver, using Form SSA-632BK. Use this if you agree the overpayment happened, but it was not your fault and you cannot afford to pay it back. Door number 3. Lower monthly recovery rate, using Form SSA-634. If you owe the money, fill this out to request a manageable payment plan, like $10 or $25 a month, instead of losing 50% of your check. The golden rule: if you submit an appeal or a waiver within the first 30 days, Social Security is required by law to pause all collection efforts while your case is reviewed. Your full check keeps coming while they process your paperwork. Never leave an overpayment letter sitting on the table. Act before the 30-day clock runs out. Let's bring this all together so you can protect your money today. Here are your 5 action steps for this week. First, compare your numbers. Pull your latest Social Security statement and compare your gross benefit to the net amount landing in your bank account. Second, check for Medicare Savings Program eligibility. Call SHIP or your local Medicaid office and ask if you qualify to have your $202.90 Part B premium paid for you. Third, review IRMAA surcharges. If your 2024 income was high due to a life-changing event like retirement, file Form SSA-44. Fourth, stop the overpayment clock. If you receive an overpayment letter, file Form SSA-561 or Form SSA-632-BK within 30 days to freeze collection. Fifth, share this video with at least one friend or family member on Social Security. The system relies on people not reading the fine print, but by taking action today, you keep control of the money you earned over a lifetime of hard work. If this video helped you, hit the like button, subscribe, and leave a comment below letting me know if you've seen any of these deductions hit your check this year. Thanks for watching, and I'll see you in the next video.